After the last 2 weeks' market volatility and headline-driven chop, you may be wondering what direction top analysts see the market moving over the next 6 months and whether your portfolio is truly optimized after the spurt of recent market turbulence. Today, we'll be covering where we at Nexus see things heading, the top sectors we're paying close attention to, and some practical takeaways regarding the state of the market. Let's hop in. What's going on, guys? I'm Robert Montez, lead portfolio manager at Nexus Wealth Management in beautiful Missoula, Montana, and our 6-month forward-looking outlook remains cautiously constructive. All in all, the economy has shown impressive resilience through recent events. With momentum from strong underlying fundamentals plus AI-driven productivity gains, many analysts still see the S&P reaching 7,500 to 8,000 by year end, representing double-digit growth in 2026. While the VIX Volatility Index has trended up around 10 points to 27 compared to a month ago, betting markets are still pricing recession odds in 2026 low at around 30%. As such, conditions still look manageable, though some firms are noting oil volatility warrants a measured eye. Here are 3 positive drivers my team and I are watching closely as we move forward. First, ongoing strength in energy and defensive sectors will most likely continue to provide a natural buffer and rotation opportunities that help weather short-term bumps. The good news with energy is that because the US is the world's #1 oil producer and has a highly diverse supply base and strategic reserves, the fluctuations we're seeing now with energy should be resolved over the next couple of months or sooner, depending on how long the US remains engaged with Iran. However, during this time, we do see some opportunities in the near future regarding the energy sector. Second, resilient labor and consumer signals have kept spending and growth on track for Main Street families. The latest private payroll data showed steady job gains in healthcare, education, and essential services. Even with the recent oil price spike, consumer spending has remained remarkably stable, which tells us that families are still feeling confident enough to keep the economy moving forward. Third, we're watching the strong long-term tailwinds from solid corporate earnings and ongoing innovation, especially in AI and technology. Patient long-term investors who have kept their eyes on the bigger picture instead of getting caught up in short-term headlines continue to see gains. Analysts see companies across the S&P on track to deliver double-digit growth again this year, fueled primarily by strong balance sheets and the productivity boom from AI. Of course, let's be real, nothing moves straight up, and we definitely expect some chops scattered in with the upward movement. We will most likely see rough patches from lingering geopolitical issues and higher energy costs. Potential inflation stickiness is another area that will likely cause some fluctuations. And finally, policy uncertainty may lead to some dips as we move forward. So guys, that's where we at Nexus see things heading over the next 6 months. We expect things should continue to grow solidly, but also anticipate some bumps in the process. With that said, if you're ready to level up your portfolio and want a team of experts monitoring your holdings on an ongoing daily basis, reach out to us by visiting nexuswealthmanagement.org. We're here to help you live your best financial life possible. Thanks a lot, guys. Until next time.